discuss the various aspects of the new labor law. Eastman Export from Tirupur. Eastman Exports, are you from Tirupur?
Yes, sir, from Tirupur.
Nice to see you. Thank you for joining.
Yeah.
Loan export promotion.
Okay, we'll start the program. Thank you very much for joining once again. The subject of today's discussion, although we are on a Monday morning and prime time, that is noon, so it's a busy day and a busy first day of the week and a busy morning schedule people have. But nevertheless, we see about 35-40 people have joined. Thank you very much for joining in. The subject matter is, of course, recent developments in labor codes and their practical implications. The key part here is how are they panning out now that they've been implemented, and government has also issued the necessary guidelines and notifications in the regard. So I welcome you all to today's webinar on recent developments in labor codes and their practical implications. We are hosting this session in collaboration with Ernst Young, a well-known global company in professional and advisory services. Most of you, and if not all of you, would have heard about them. Friends, our textile industry, as we all know, is highly labor intensive and is important for India's GDP. And one of the key features of the industry is the labor intensity and the employment potential that it provides. And staying ahead of regulatory shifts is not just about compliance, it is in fact a strategic necessity, or it's about strategic survival. As we all know, the government of India announced the 4 central labor codes, and it officially came into force from 21st November 2025. Just give me a minute. Take over. I just have to rush for another meeting. Sorry, I'll join you back.
Yeah, good afternoon. To continue with our ED sir's remark, as you all know, the government of India has announced this central labor codes officially, which came into force from 21st November 2025. And following that implementation, the government pushed forward to finalize the operational frameworks. So on 30th of December 2025, draft central rules were released for public consultation. And on 8th of May 2026, the government of India notified the final central rules under the labor codes. With the final rules now active, we are officially navigating a new era of employee governance. So today we are going to decode these labor codes, and our faculty will cover following important pointers: the Code of Wages 2019, the Industrial Relation Code, then the Code on Social Security 2020, the Occupational Safety, Health and Working Conditions Code 2020, and critically important, the final central rules that dictate their daily compliance. So today we have with us Mr. Puneet Gupta. He is a partner at E&Y and the solution lead for the People Regulations Service offering. So let me introduce him shortly. Mr. Puneet brings him over 17 years of rich experience at E&Y, specializing deeply in employee-related regulations, provident fund transactions, and compensation restructuring. He is Bachelor of Commerce graduate from Delhi University, a chartered accountant who secured an All India rank of 16 and a gold medalist in the final examination of the Institute of Company Secretariat of India with All India rank number 1. So more importantly for us today, Puneet has been on the front lines of these specific reforms. He has extensively interacted with the industry, field representations directly before the Ministry of Labor and Employment to highlight practical corporate challenges and authorize numerous articles for major business dailies on these very codes. So thank you so much, Puneet, for joining with us today. And thank you all of you for joining for this session. Now, without wasting time, I request Puneet to take over the session. Over to you, Puneet. Thank you.
Sure. Thank you so much. Good afternoon, everyone, for joining the session today, and thank you so much for the warm welcome. Just in the interest of time, given that we have 50 minutes for the session, I'll start talking about labor codes. They've been obviously been a much debate and a lot of things happening in media and industry effective since 21st November 2025, ever since the labor codes have been notified. What they and obviously there've been multiple webinars, media alerts, etc. What we will do is, instead of going code by code and keeping it very technical, I will give you some practical insights or tips basis are working with the organizations on what should organizations really be doing practically to implement labor codes in respective organizations. So I'll focus, while obviously the technical part of it will be covered, but I'll try and cover as much practical guidance as possible in terms of the labor codes implementation journey. We're obviously talking about all four labor codes. In fact, if you look at the whole journey of the labor codes, the Code on Wages 2019 got notified in August 2019. And the other three codes, the Code on Social Security, Occupational Safety, Health and Working Conditions Code, and the Industrial Relations Code 2020, all of these three codes got notified in September 2020. So the labor codes have been out in public domain for a very long time. Last 5 to 6 years, we were all waiting for the labor codes to be finally implemented. And then on 21st November 2025, to the surprise of all, the government issued notifications implementing all four labor codes in one go. So as we stand today, all of these laws are now fully operational, effective for all organizations in India. Now, if you look at labor codes, uh, it's been a long journey. Like I said, the labor codes themselves were notified in 2019 and 2020, though some of the draft codes were notified much earlier. So it's been almost 10, 20 years the labor codes have been talked about. They were made effective 21st November 2025. A lot has happened between then to now, and a lot is going to happen over the next few months. So the central government issued the draft central rules, then there were a number of FAQs, guidance documents issued. But then finally, the government issued final central rules on 8th May 2026. As we stand today, for most states, except a few, most states, the final state rules are still pending. So therefore, there's a lot of debate on what is the difference between central rules and state rules and which rules will apply to what class and category of employees. Let me try and explain that. So the central labor codes are central regulations and therefore to that extent applicable to all organizations. But in the labor codes, there are certain specific aspects on which appropriate rules have to be made by the appropriate government. So for organizations which are government organizations or certain telecommunication, banking, insurance companies, and large part of government organizations, the appropriate government is the central government. So for implementing labor codes in these organizations, we have to look at labor codes read with final central rules. So to that extent, for these organizations, labor codes are fully operational now because the labor codes have been notified and the central rules have been notified. For other manufacturing and non-manufacturing organizations, say for a private manufacturing organization, the appropriate government is the state government. So to implement labor codes for these organizations, you have to look at labor codes read with state rules. For them, given that most states, the final rules are still not notified, only part of labor codes is effective. But if you're a government organization, a government PSU, then in that case, the central rules are already notified. So therefore, that's the difference between central rules and state rules. The whole myth sometimes that is in the industry that labor codes will only be made effective once the state rules are, once the states adopt labor codes. That is incorrect statement because the labor codes are themselves central laws. The states only have to issue rules around labor codes. The states don't have to adopt any labor codes. So to that extent, the labor codes are fully operational. Like I said, the labor code's been in force since 21st November 2025. The central rules were notified on 8 May 2026. The final state rules are pending. So this $1 million question on whether labor codes are effective or not, the simple answer is that labor codes are fully effective 21st November 2025, only where we need certain notifications or we need certain rules, and those rules and notifications have not been notified. To that extent, the earlier notifications and earlier rules will become applicable. For example, statutory bonus threshold ceiling of 21,000 rupees have not been notified in the labor codes. To that extent, we continue to use the old ceiling under Payment of Bonus Act. Similarly, for gratuity purposes, the 20 lakh maximum limit on gratuity payout has not been notified under Code on Social Security. So we continue to use the ceiling under the Code on Social Security. So therefore, the labor codes are effective 21st November 2025. Major compliances are required to be done effective 21st November 2025. Only where certain rules and certain regulations are required, to that extent, we will have to rely on earlier notifications and earlier ceilings. That's a very, very important guidance that I can give you, that for gratuity, for leave encashment for workers, all of these concepts are already effective 21st November 2025. The latest being ESI, where ESI authorities have also clarified, and the government have also through FAQs clarified that for coverage under ESI, for calculation of contributions under ESI, the definition of wages will become applicable effective 21st November 2025. So therefore, please consider that very important point in compliance in your respective organizations. This is one of my favorite slides, so I'm going to spend a little bit time on it. What this gives you is this gives you 8 areas or 8 work streams where an organization needs to spend time and work to prepare fully for labor codes. So if someone wants to understand what is it that I should be doing in labor codes, this one slide give you a very good reference point. It tells you 8 areas where work is required. The first one is the classification of employees. So under labor codes, there are two definitions. One is for an employee, which is a general term, covers all employees. And second is a worker definition. Only class or category of employees would be covered under workers. Now, workers are eligible for specific benefits under labor code. So as an organization, you can only be compliant with those specific benefits if you've done the worker classification in your organization. So I always say that worker classification is the first point, really, the first starting point for an organization to comply with labor codes. The second is obviously the impact on employee salary structure. We have the definition of wages under labor codes with its inclusions and exclusions. An organization need to look at their salary structure, identify what components are included or excluded from the definition of wages, and then, if required, realign salary structure basis the wages definition. This is again very important compliance to be done. A lot of organizations have already either looked at it or are now looking at salary structure from a labor code perspective. The third is impact on employee benefits, and I'll talk about 6 benefits: gratuity, PF, ESI, leave encashment, overtime, statutory bonus. These are 6 benefits that get impacted on account of labor codes. Some will get impacted immediately, some may impact later. All of these benefits have an impact on P&L account. Some of these have retrospective impact. Some of these have recurring impact in future. An organization need to understand the financial, non-financial impact and then prepare and plan for it. This is more a summary slide. I'll cover details on each of these topics. The fourth is flexi hiring. So if you have contract labor, and I'm assuming that in your manufacturing organizations, a large part of hiring may be done through contract labor or third parties. When would these individuals hired through third party qualify as contract labor? What are prohibitions on engaging contract labor for core activities? what are your financial, non-financial obligations when hiring contract labor or third-party employees. All of these arrangements will need to be seen. The fifth is the impact on policies and processes. A number of HR policies like working hours, overtime, leave, payroll, full and final settlement process, all of these undergo changes on account of labor code. So therefore, it's important that an organization align their internal policies and processes given the provisions of labor codes. Health and safety, again, a very important topic from a labor code perspective. Whether you have women employees working post 7 p.m., what are the health and safety benefits to be offered to such employees? In general, what are the health and safety considerations? When would you appoint safety officers, nominate safety committees? All of these things will need to be seen from a labor code perspective. Employee relations, again, a very important topic from a labor code perspective, because now there are number of committees that organizations need to create fresh to ensure that they handle employee escalations properly. Now those were not required under the earlier law. So if you now have workers increase in excess of the specified limits, then we need to create those committees to ensure that we're compliant from a labor code standpoint. The last is compliance framework, registrations, registers, records, returns, forms, nomination form, appointment letter templates, all of these changes on account of labor code. So organization need to really look at the entire compliance framework to ensure that they are fully compliant from labor code standpoint. So these are therefore 8 work streams. I would always suggest to organizations to look at the level of compliance currently under each of these and then make appropriate changes so that you're compliant. Now we'll spend time on each of these in little bit greater detail. The first and the most important, obviously, is the financial impact under labor codes. Maybe I'll request the participants, if you have any questions or comments, you can put that on the chat window. And then last 5 to 10 minutes, we can take up some of those questions, if any. So therefore, the first major impact is obviously the whole financial impact under labor codes. To understand financial impact and labor codes, we will talk about 3 aspects. One is the definition of worker, because more workers means more financial impact for an organization. Second is the impact on account of new definition of wages. There is a completely new reference salary now for calculation of all benefits. Therefore, organizations should look at how wages is defined, compare that to the current salary structure, and ensure that they realign salary structure. Again, very important from a compliance standpoint. Sorry. The third is the impact on various employee benefits, and I spoke about these 6 key benefits. Now, if I look at the definition of worker, the definition of worker under labor codes has 2 parts, a coverage section and an exclusion section. The coverage section is very broad. Anyone doing any kind of manual, unskilled, skilled, technical, operational, clerical, supervisory work is covered under the definition of worker. Now it covers aspects like skilled and technical work also. So mostly all employees would get covered under the coverage part. The important is the 2 exclusions. So any person who's mainly employed in a managerial or administrative capacity is excluded, or a person who's engaged in a supervisory capacity with wages exceeding 18,000 rupees per month is excluded. So therefore, what an organization need to do is to look at employees at different levels, different roles, identify whether they're performing any managerial or administrative or supervisory work. If they are, then they're excluded from the definition of worker. Otherwise, they're included in the definition of worker. So like even in your sales organization, even in office setup, if you have employees who do not have any managerial or administrative or supervisory duties, then they can be excluded. They can be included in the definition of worker. Now, the challenge is that these terms, managerial, administrative, supervisory capacity, have not been defined under labor code. So there's a lot of interpretation being used, a lot of positions that an organization need to take to identify workers in an organization. Why do you need to do this worker classification? Because over time under labor codes, the requirement to do leave encashment every year, the whole contract labor piece, the need to set up various committees, other employee relations, industrial relations matter. All of these are linked to the definition of worker. These are provisions that are applicable to workers only. So you can only comply with these provisions once you've identified workers in your organizations. And like I said, there are a lot of these challenges and positions that an organization need to take, because what is managerial level, what is supervisory level, whether professionals with creative roles are included or excluded from the definition of worker, there is no clear position on that in the law, because the law or the any of the rules or regulations or notifications do not have any clarity on these terms: managerial, administrative, or supervisory capacity. So organization need to look at it and then uh, analyze the required worker population for the organization. And like I said, more workers means more cost, because overtime and leave encashment every year are two benefits that are linked, that are available only for workers in an organization. So therefore, to identify um, the worker category, is important to identify the financial impact for an organization. The second impact, financial impact, of course, is on account of definition of wages under labor codes. And this, again, is a very complicated definition under labor codes. But if you were to summarize this, I can divide the definition of wages into two key parts: a coverage part and an exclusion part. The coverage part of the definition covers all salary, all remuneration expressed in terms of money or capable of being expressed. So, therefore, anything which is in the nature of salary, in the nature of remuneration paid to an employee, whether in cash or like through bank transfer, or any benefit also, because benefits are also capable of being converted or expressed in terms of money, all of them are covered under the definition of wages. Basic pay, DNS allowance, retaining allowance are only inclusions in the definition of wages. These are more like examples. There have been a lot of media myth created to say that only basic pay, DNS allowance, retaining allowance are included or covered. That's wrong, because these are only inclusions or examples or illustrations of components that are covered under the definition of wages. The important point is, or the important fact is, the point that it covers all remuneration under wages definition. The second part is the exclusions, which is important. So components like statutory bonus payable under law, conveyance allowance, house rent allowance, overtime allowance, commission, certain benefits like housing accommodation, value of travel concession, amenity of service excluded by general or special order of the appropriate government, some paid to defray special expenses incurred in the course of employment, certain retiral contributions like contribution to PF and pension gratuity. These are excluded, specifically excluded from the definition of wages. If we read the two together, what it really means is that anything which is not in the exclusion category is in the nature of salary is covered in the definition of wages. Then important also is the fact that there is a limit on exclusions. The exclusions cannot be more than 50% of the total remuneration. Now again, there's been a lot of myth created on this to say that basic salary should be 50% of total remuneration. Or another myth that I always often hear from organizations is that organization will say, I don't have financial impact on account of labor codes because my basic salary is already more than 50%. That's not right, because there is no requirement in the labor codes for basic salary to be 50%. And second, even where basic salary is 50%, but their exclusions are less than 50%. Let's say total of all of these components is only 20% of total salary. The remaining 80% will become wages and will become base for calculation of all benefits. So therefore, most organizations will have a financial impact on account of labor codes, which needs to be analyzed. There's also this whole coverage of remuneration in kind, which says remuneration in kind, to the extent it does not exceed 15% of total wages, shall deem to be included in wages. Now, what is remuneration in kind and how would this calculation work? There's again a lot of ambiguity on that. So most organizations today will generally rely on the coverage and exclusion part to say that it covers all components and it excludes these specific components subject to 50% threshold, is the way to look at wages definition. Now, again, I often get asked this question on whether performance bonus is covered or excluded. And the simple answer is that if you look at the definition of wages, there is no exclusion for performance bonus, but generally performance bonus is something that is paid once a year, is not regular fixed part of salary. So therefore, the general position taken is that performance bonus should be ignored or should be excluded from total remuneration for wages calculation. But again, a position that the organization will need to take because there is no specific uh, definition in the law which excludes performance bonus from wages calculation. The government, the Minister of Labor and Employment, through the FAQs on 16th March, have clarified that performance bonus can be excluded. But again, organizations will need to take certain positions on some of these components. So that's the second reason. The first reason was the definition of worker. Then we've discussed the definition of wages under labor codes. Now let's look at the impact on various statutory benefits on account of labor codes. The first one we should consider is gratuity. Now, again, some myth in the industry that gratuity is applicable after 1 year or gratuity is now applicable after 3 years of service. That's not correct because for permanent employees, gratuity is still applicable or an employee is still eligible for gratuity after 5 years of service, right, which is 4 years, 190 days or 4 years, 240-day mark. Only in case of fixed term employment, where you have an individual hired on a fixed term, their gratuity will now be applicable after 1 year of service. Earlier, they were eligible for gratuity after 5 years, but now a fixed term employee, where you issue or put an end date to employment contract, in that case, gratuity will become applicable after 5 years of service. For death or disability cases, anyways, there was never a timeline applicable. It continues to be like that under labor codes also. So one big change in labor codes is the fact that fixed term employees eligible for gratuity after 1 year of service. The second is the calculation formula itself. Earlier, gratuity was applicable basis last drawn basic salary. Now, gratuity will be applicable basis last drawn wages as defined under the labor code. Now, this has a huge retrospective impact for an organization. Let's say you have an employee with 20 years of service with the company. For past 20 years, the company would have made provisions in their books for gratuity basis last drawn basic salary. But if that person were to leave employment now, after the labor codes are implemented, for past 20 years, gratuity will get calculated on wages definition. So therefore, there is a huge retrospective impact for organizations. Then under labor codes, like the earlier Payment of Gratuity Act, gratuity is capped at 20 lakh ceiling. The government can come up or revise the ceiling, but as of now, the 20 lakh ceiling is applicable. Of course, there are organizations who have uncapped gratuity, who don't limit gratuity to 20 lakhs. That's an acceptable norm because Payment of Gratuity Act and labor codes also allow an employer to provide better terms of gratuity. But those organizations probably will have much larger financial impact because uncapped gratuity on wages definition will be much higher cost than uncapped gratuity on basic salary. So again, some cost optimization opportunities can be implemented there. But two major changes on account of gratuity. One is the fact that fixed term employees eligible for gratuity after 1 year of service. And second, that gratuity will now be calculated basis wages definition, and there's a retrospective impact on gratuity. The simple rule is anyone who's leaving employment on or after 21st November 2025, companies will need to calculate gratuity basis wages definition. So for your organizations, if you have employees who've left between 21st November, where the last working day was between 21st November to whatever date, and you only paid gratuity basis basic salary, that is non-compliance under law. Organizations will need to go back and calculate gratuity basis wages definition. It's one area where there is maximum financial impact for organizations. Maybe I'll take some of these questions on the chat because they're relevant for the discussion we're having. Will we get any retrospective impacts since state rules are not notified? Vinod has asked this question. The answer is yes. there will be retrospective impact on gratuity. Gratuity calculation is not dependent on state rules, right? So even without state rules, an organization will have to calculate gratuity for employees who've exited between 21st November till date and calculate gratuity basis wages definition. We want what are the forms to be used. So currently, if you're an organization, Shri Radha has asked this question. Shri Radha, if you are covered under central rules, if you're a government organization and covered under central rules, then all the forms have been notified under the central rules. Those forms will become applicable. But if you are a private manufacturing organization, then the forms will be as per the applicable state rules. So Gujarat and some other states have issued state rules, but other states have not issued. You'll only be able to maintain those forms once the new rules are notified. Till then, the existing rules will be applicable. What proactive, then Sachin has asked this question, what proactive measures should HR leaders take to prepare organizations? Is the earlier slide, Sachin, that I covered. All these 8 steps are steps that organizations should take to be fully ready, to be prepared from a labor code standpoint. So I'm not covering that again now. Then Suresh has asked this question on difference between appointing consultant versus fixed term employment contract. Very, very good question. See, the difference is whether or not you establish employer-employee relationship with an individual. Even where, and I've seen this across multiple times, even where you hire intern, you hire, sorry, even where you hire retainers or consultants, but those are establishing employer-employee relationship with an organization. In those cases, those will be considered as fixed-term employees, and gratuity will be applicable to them after 1 year of service. But if you hire a consultant or a retainer who does not establish employer-employee relationship, where he may be working for multiple organizations, not subject to your organization's rules and conditions, in that case, they will be excluded from fixed term employment and gratuity will not be applicable to them. So the whether or contractor or consultant or a fixed term employee, that difference is only between or basis employer-employee relationship in an organization. Okay, now let's look at impact on provident fund. The major, so for calculation of PF also wages definition will become applicable. However, for PF, there is a employees provident fund scheme which was notified in 1952, which will continue to apply. In the labor codes, the government have said that the current PF scheme will continue to apply for 1 year after labor codes implementation. So the current PF scheme that we have will continue to apply for till the time the new scheme is notified. In the current PF scheme, there is a salary ceiling of 15,000 rupees to say that employer and employee are not required to contribute on salary exceeding 15,000 rupees per month. So therefore, if you have employees with basic salary is already in excess of 15,000 rupees per month, and you're contributing to PF either on 15,000 rupees or on full basic, generally a position is possible that there is no requirement to contribute on wages because you're already contributing on more ceiling more than provided under the law. So therefore, provident fund contributions may not get impacted as till now, till the new scheme is notified. As of now, provided we are contributing to PF on full basic salary or 15,000 rupees. So that therefore PF may not have an impact. Gratuity definitely will have a huge impact. Leave encashment, again a very important topic. Leave encashment under labor codes as a concept is only applicable for workers, and therefore I go back to my earlier point. More workers means more financial impact and will impact various statutory benefits because leave encashment is only applicable for workers in an organization. As per labor codes, we're required to give workers 1 day of leave for 20 days of work. The carry forward limit is set at 30. Now, the major change is that unlike other laws, earlier laws, now if a worker has more than 30 unavailed leave at the end of the year, the balanced leave needs to be encashed as of 31st December. However, a worker can still demand encashment for these 30 leave also. So if I give you an example, let's say someone has 50 leave balance as of 31st December, In ordinary course, 30 leave would get carried forward. The balance 20 will need to be in cash. A worker can demand encashment for those 30 leave also. So that's the major impact on leave encashment that organization will need to see. And all leave encashment have to be calculated basis wages definition. So uh, therefore, earned leave for a worker would never lapse now under labor codes. That's the major change compared to earlier laws. The next impact is on overtime. Overtime also under labor codes is applicable for workers. For a worker to work overtime, we need to take consent from worker now. A worker is eligible for overtime after 48 hours of work in a week. This is as per the central rules. So the daily or weekly limit beyond which overtime has to be paid, that limit will be notified in the rules. In the central rules that were notified on 8th May 2026, overtime is applicable after 48 hours of work in a week. Uh, so there is no daily limit beyond which overtime is applicable. So you can even have employees or workers working, say, 10 hours in a day, five less than 48 hours in a week. There is no requirement to pay overtime in such case also. However, again, for private manufacturing and other organizations, we'll have to look at the state rules to determine when overtime is applicable. But as per the central rules, overtime is only applicable after 48 hours of work in a week. Overtime is calculated as per twice the wages. So it will not be on gross salary. It will not just be basic salary. Overtime have to be calculated at twice the wages as defined under the labor codes. As per the final central rules, the maximum overtime is limited at 144 hours per quarter, which means that a worker can work only up to 144 hours in a quarter as overtime. ESI, again, like I said, a major change for determining employees' eligibility to ESI and for calculating ESI contributions. Now, wages definition will become applicable. So it will not be gross salary effective 21st November. This change is already implemented. ESI contributions will be basis or eligibility and contribution both will be basis wages definition. So your number of employees covered under ESI will go up, but the contribution per employee will go down. Sorry about the throat. For statutory bonus eligibility, again, it has to be seen basis wages definition. So therefore, there is a financial impact, especially on account of gratuity, leave encashment, overtime. ESI and statutory bonus will also undergo changes. Provident fund is one area where there is no major change as of now till we have the new PF scheme notified. So those were the impact on all of these statutory benefits. Maybe I'll take one or two questions because these are important topics. So Sandeep has asked, attendance allowance varies because it depends on actual number of days present. Should we include or exclude this allowance in wage code? So very important point to understand that, see, if you look at the wages definition under labor codes, only specific components are excluded. So while overtime allowance is excluded, attendance allowance is not excluded. Now, in general parlance, attendance and allowance is for regular working hours versus overtime allowance is for excess working hours. Organizations really will need to take positions on attendance allowance, but generally speaking, attendance allowance should be included in the definition of wages because it is not an excluded component. Then there's a question from Mr. S.K. Mittal. Can we have only two components in wage, basic plus and HRA, where 50,000 is basic, 50,000 HRA? So, Mr. Mittal, there is no, the law. Mr. Mittal, if I can request you to be on mute, please.
Yeah. Am I audible?
You are.
Yeah. Actually, if it is 50% of the total wage, then can we have only two components, basic plus HRA?
Yeah. So, Mr. Mittal, the law does not define how you split salary is basis an organization's internal policy. The law only defines how wages is to be calculated. The law does not define the base or the split of salary into various allowances and components. That's an industry or an organization specific call depending on how much employees are expected, because having unreasonable amounts in one component also can become challenging. So
If
that's
the if the gross salary is 1 lakh, can we have 50% basic and 50% HRA? Will it be legal?
So, Mr. Mittal, again, like I'm clarifying, there is no law in India which define how salary structure should be created. That
But
is,
but the act has said that the exclusion part should not be more than 50%.
yes, the exclusions cannot be more than
So
50.
HRA is in the exclusion. So my question is simple, that if the total salary is 1 lakh, can we have HRA to up to 50%? That is 50,000. Will it be okay?
Mr. Mittal, I will not be able to confirm because I'm continuously explaining you. The law does not define how much should be HRA, how much should be conveyance allowance. The law only defines the maximum cap on exclusions.
Okay.
This is
If I keep HRA at
Mr. Mittal,
60,000,
I think for the benefit of larger audience, some of these queries can be parked and discussed separately.
okay.
Let's cover the basics so that everyone gains from this session.
Oh.
It has to be basic, yeah.
Okay. Then Narendra, sorry, is asking, can you explain the overtime limit for a quarter in detail? So Narendra, what I'm trying to say is there is always a limit on how much maximum overtime an employee can work. As per the central rules notified on 8th May, maximum overtime limit has been set as 144 hours in a quarter, which means that in a quarter, a worker can work maximum 144 hours as overtime. Beyond that, overtime cannot be done. That is what I was trying to explain. Then Sandeep has asked this question. As per earlier notification issued by the government, the applicable code is effective from November. With due respect, can we pay ESI contribution retrospectively for employees covered under ESI? So Sandeep, obviously, ESI contributions can be paid retrospectively. Practically, the challenge we see in the industry is the generation of IP card, because the ESI portal only allows IP card to be generated, which is a requirement to contribute to ESI only within 10 days of employee joining. So if we delay generation of IP card, then there are certain processes that we need to follow, including some approvals that we need from ESI. But to answer question, yes, ESI change is effective 21st November 2025. And yes, ESI contributions can be deposited retrospectively. Yeah, Satya, you're right. Earlier, the overtime cap was 75 hours in a quarter under old Factories Act. Now it is 144 hours per quarter. This is as per central rules. For private manufacturing organizations, the overtime limit will be notified in the state rules. So you'll have to look at the final state rules once notified for your respective states. Ravi is asking, please can you also clarify PF rule in wage code to be included or not? PF is excluded from the definition of wages, so it's covered within the 50% overall cap on exclusions. Any exemption needed from factory inspectorate? No, for overtime, no exemption or approval is needed. We need consent from workers, not from uh, inspectors. If an employee is absent for 3 days in a week and next 3 days he worked, can we allow him to work overtime? Yeah. So in a week, as long as the person has not worked more than, as per the central rules, if the person has not worked more than 48 hours in a week, no requirement to pay overtime. So even if, say, 3 days the person has worked for 12 hours every day, only 36 hours in a week, no requirement to pay overtime. As per the central rules. Again, I'm saying, clarifying that this will be notified for private manufacturing organizations as per the state rules. So please watch out for those state rules once notified for your respective states. Okay, in the interest of time, I'm moving on. So we discussed the definition of worker, we discussed the definition of wages under labor codes, we discussed the impact on key statutory benefits, including the retrospective impact on gratuity. Now, just very briefly, let's talk about some policies that will undergo changes. So this is again a very high level overview of the kind of policies that will undergo changes on account of labor codes. We can spend hours discussing each of these topics. Given that we only have limited time, I'm just sharing the kind of policies and processes that will undergo changes, whether it is on account of hiring, whether a lot of changes on account of payroll, how wages should be paid, how various deductions are possible from employee salary, limit on deductions that one cannot deduct more than 50% of pay of wages in any month. If you're giving loans and advances to employees, how can such loans and advances be recovered? Full and final settlement of wages that needs to be done within 2 working days. There are a lot of these aspects from a payroll standpoint that needs to be seen. From a benefit standpoint, creche benefit is again a major change, and there are provisions under OSHWC code and also provisions in Social Security code on creche and creche benefits. So if you're a manufacturing organization, you have provisions under both these codes on how creche should be given to employees. Canteen, again, there are very detailed norms on how canteen benefits should be given to employees. This is only applicable for factories with 100 or more workers. If you have interstate migrant workers, there are provisions on how journey allowance should be given to employees. Then various working provisions like working hours, overtime, leave, all of these gets impacted on account of labor codes. Number of employee relations aspects, employee documentation, like I said, how appointment letters should be issued to employees will be notified in the rules now. And any employee who's not been issued appointment letter should be issued a new appointment letter within 3 months once the rules are notified. How we collect employee nomination, how salary slip is to be issued to employee. Again, multiple changes on all of these counts. Number of committees to be created, all of these changes. So I'm just kind of giving you a snapshot of or an overview of the kind of policies and processes that gets changed. Now, especially where Shops and Establishment Act is applicable, important to understand that Shops and Establishment Act is not getting subsumed under the Labor Code. So for some of these provisions, there may be duplicate provisions under Shops and Establishment Act and Labor Codes. To the extent possible, my suggestion is harmonize both Shops and Establishment Act and Labor Code provisions and then create a policy process framework such that we're compliant both under state regulation and under the labor codes. But if we're a factory where SNE Act is not applicable, then we only have to follow labor codes for all of these provisions. Then let's talk about contract labor and flexi hiring. So first we spoke about or we'll discuss fixed term employees. They were covered earlier under standing orders regulation. They've now been given formal recognition under labor codes for all categories of employment. An employee will be said to be a fixed term employee only if there is a defined end date or where the person is engaged for a defined or fixed term. There are 2 or 3 benefits that has to be offered to fixed term employees. One, all the salary benefits that you offer to permanent employees have to be offered to fixed term employees also. So therefore, there cannot be any discrimination in wages and benefits when you engage fixed term employees. Second, all the statutory benefits will be available for fixed term employees on a proportionate basis. And third, gratuity is applicable for fixed term employee after 1 year of service. Under labor codes and central rules, there is generally no restriction on the number or the period for which the fixed term employees can be engaged or the kind of work which the fixed term employee can engage. You can hire a fixed term employee for core activities also in an organization. So that's on the fixed term employees. For contract labor, which were earlier covered under Contract Labor Regulation Act, multiple changes under labor codes. One, there is a new definition of contract labor now under labor codes. If an employee is a permanent employee of a contractor or the third party and gets all salary and other benefits from that third party, then that person can be excluded from contract labor definition. So it helps resolve some practical aspects where, say, you have a service contract with an agency and the agency has their own permanent employees who get salary and benefits from that agency, then those individuals will now be excluded from contract labor definition. A positive change, I would say, in the labor codes. The second one is big one, where there's now a prohibition on engaging contract labor for core activities. Core activities means the main activity or main activity for which that establishment is set up, or any other activity which is necessary or essential to that main activity. Engagement of contract labor is prohibited in core activities now. However, there are certain exceptions. And the first exception is very broad. If you can prove that the normal functioning in your organization is such that you always engage contract labor for those core activities, then we can still continue to engage contract labor for core activities. For example, in manufacturing organization, if you always had contract labor working on shop floor and we are able to demonstrate that that is the normal functioning in my organization, then we can be covered under the exception and continue to engage contract labor for those core activities. But if you understand the general mindset of the regulator, the general mindset is to discourage contract labor hiring through third parties and push or influence organizations when doing more fixed term on roll hiring. Because obviously, when you do contract labor hiring, you're dependent on a third party to do compliance. But if you're doing fixed term hiring, those are direct on roll employees for a fixed term. Then contract labor also, this concept of same pay for same work is applicable, where there cannot be any discrimination in wages and benefits that are offered to contract labor vis-a-vis permanent employees. Principal employee will be liable for wages, statutory benefits, and welfare conditions. There are now a number of these welfare facilities, especially laid down for factories. So if any such welfare facility is provided to permanent employees, similar welfare facilities will have to be provided to on-roll employees also. The last one in the central rules, they've said that the principal employer should set up a grievance committee for contract labor, which means that in addition to grievance committee that you will set up for your own role employees, there is an additional grievance committee that will need to be set up for contract labor as per the central rules. So if your organization is covered under central rules, then this is already applicable. Otherwise, this will be dependent on the state rules once notified. So therefore, multiple changes when we talk about contract labor and fixed term hiring. Just because do have a hard stop at one, I'll cover some of these very quickly. Annual health examination is only applicable as per the central rules, only applicable for dock workers and building construction workers. If you are covered under central rules, then it is only applicable for dock workers, building construction workers. If you're covered under state rules, then you'll have to see the final state rules to determine the class or category of employees who are required to be provided annual health examination. Employment of women in night, this provision is applicable for all establishments. One, we have to offer them, we need to take a consent from women employees if they work in night shift, which is 7 p.m. to 6 a.m. Second, as per the state rules, the organization need to provide safe transport and infrastructure facilities and ensure that there is safe working conditions. This will be as per the applicable rules. Then, like I said, for factories especially, there are a lot of health and safety conditions. There are detailed rules provided in the central rules on the kind of cleanliness, hygiene, ventilation, all of these health and welfare facilities are responsibilities of the principal employer, of the employer. In case of accidents, there are detailed forms and timelines prescribed on how those accidents need to be reported for labor authorities. For safety committee, if you are in establishment with 500 or more workers, then safety committee will have to be established. If you're again a factory with 250 or more workers, then you need to appoint safety officers also. So like I said, there are a lot of focus on health and safety aspects. On employee relations, there is a mandatory requirement to set up a grievance redressal committee. This is for on-roll employees. where if you have 20 or more workers, then a grievance redressal committee need to be set up. This committee should have participation both from employers and workers. And there are detailed rules provided in the grievance committee on how the committee should operate. In addition, there is also a grievance committee that need to be set up for contract labor. This, like I said, is as per the central rules. You'll have to wait for the final state rules if you're an entity covered under state rules. But a separate grievance committee to be set up for contract labor. Model standing orders, the limit has been increased to 300 or more workers. If you are in industrial establishment with 300 or more workers, then standing orders are applicable. There are two options for standing orders. Either we create our own standing orders and adopt them, or get it certified, or we simply adopt model standing orders notified by the central government. The central government on 8th May 2026 have notified final model standing orders. There are 3 standing orders notified, one for mine, second for manufacturing, and third for service sector. So if you already don't have standing orders and you're an organization with 300 or more workers, then either adopt model standing orders or create own standing orders and get it certified. If you've already had standing orders, then you need to ensure and check that your current standing orders are not in violation of any provision of the labor codes and covers all of these aspects. If they don't cover all of these aspects, then appropriate amendments will need to be made to the current standing orders. This is my summary slide. I'm going back to this, that work really is required on these 8 work streams for an organization to stay compliant. I'm not covering this again. We've covered this earlier. So this is just a high level overview from my side to give you some tips and suggestions on what is it that your organization should be doing to prepare for labor codes. I'm sorry for the bad throat. I just couldn't help it. So sorry for the inconvenience. I do have a hard stop at 1. So maybe we can take some of these questions in one of the next sessions, please. I go back to the organizing committee.
Thank you, Puneet. Can you just take 1 or 2 questions from chat box, if possible?
Sure.
Yeah.
So we've covered most of it. So there's one
Yeah.
question from Suresh: is FT eligible for annual health examination? So if you're providing annual health examination to your on-roll employees, then yes, fixed-term employees, because there cannot be any discrimination in benefits. Then there's a question from Vinod on night shift. Night working timing is after 8 p.m. So yeah, so the law is that any women employee working between 7 p.m. to 6 a.m. are required to be provided those benefits. So if you have a shift which is ending after 7 p.m. or 6 a.m., then those benefits as provided under labor code should be offered to women employees. Safety officers, again, as per the final central rules, safety officers are applicable if the factory has 250 or more workers. Then last question I'm taking from Hardik. Earlier, we were following model standing orders, so we can continue. So Hardik, you need to ensure that your model standing orders are covering all aspects and are not in non-compliance with labor codes. If they are, then if you were adopting model standing orders earlier, then you can just simply adopt the model standing orders that are notified by the central government now on 8 May 2026, provided obviously you are compliant with those model standing orders. So that option is available for all organizations. Thank you.
Okay, wonderful. Can I come in? Thank you so much. Sorry, I was going in and out, but my colleagues have been listening attentively, and it's a very, very lucid and I must say, a brilliant presentation. A complicated, subject like the labor laws, which the government has tried to simplify, but it has tremendous consequences as we see. What is in, what is out, what is the old rule, what is the new rule, what is the government's intention, what does the rule say, what is the office, and what are the rules we in companies follow. So all that has to be brought into a certain framework. And I'm really grateful to Puneet ji. He has a bad throat, and yet I think he carried on and answered all the queries. All the queries may not have been answered, but feel free to write to us and feel free to raise your queries, because this is an ongoing discussion. The law has also just come in. What the law says is what has been explained. How it pans out in practice, we will see, because each company will have some, some module which may vary with what the law intended or didn't intend. So both are there. So I suppose, keeping that in view, really grateful to him. He also, in spite of a bad throat, took your questions, and at least in the chat box. And others are feel free to ask, because everybody in his company is sitting with a set of rules and set of codes in which you are managing your labor. So that whether it is in line with what the government intends to do. But one thing I got from here is that probably we are out of the Inspector Raj. Is that right, Puneet ji? Are we
Yes,
out?
they've been rebranded as inspectors come facilitators in law, in theory.
In
How
theory.
practically it will be implemented again remains to be seen.
Wonderful.
But
So
at
there
least
you
the
are.
government has taken that starting step.
Wonderful. So therefore, the intent is changing. So from an inspector's mindset, a facilitator's mindset is coming our way, which is good, because these things take time, as you know, because labor is a very sensitive subject in the country, and especially textiles promises employment. So good labor relations are very, very important and critical for this sector. So with these few words, I thank Puneet ji once again. Really grateful to you, sir, for having taken time out in spite of a bad throat to come in and meet our people. All our participants, we are grateful to you for having spent time on a rather, what would I say, not a very, very, what shall I say, exciting subject. This is regulatory in nature, but nevertheless, it has creative components, as we saw. And if our laws are in line, and if we are able to motivate the labor, they will definitely result in high production and high productivity. So with these few words, you're free. This PPT will be available on our website. We would request all of you to see our website. I think if you want, you put it on the chat box. And continuing our process of what we are doing, we have, as you know, in TEXPROCIL, a series of webinars have been launched, and we are very grateful to all our members. They are responding very positively to it, and a lot of them are also getting their clarifications. The next one, which is in line, is on 25th June. This is on export finance, pre-shipment and post-shipment credit. I mean, everybody in the group may surely know what it is, but surely there are a lot of new things which are happening and new nuances. So all of you are requested to join in. We'll be again sending the mailers for this one separately. And then we are happy to report that our advanced course or certification program in international trade has been oversubscribed. We've got more number of people interested than the number we have envisaged. So this, at the moment, it is the registration for the first round is more or less over. The second session we will start. We will send it out again. We are grateful to all our members who took time out and registered for this program, and all those who have not registered. I must admit and tell you that this is a very important program, because this will only help you upgrade your skills and the skills of your employees. And today, as we move forward in a modern economy, higher productivity, higher production, higher efficiencies, then these kind of programs will surely be of great help to all of you. So with these few words, thank you very much. Thank you, Puneet ji. Till we meet again. Thank you very much.
Thank you.